Good morning and welcome to today's Cleantech podcast. I'm your host, Dawn Van Zant, founder of InvestorIdeas.com, and this is my way of helping you stay informed with Cleantech stock news and interviews with thought leaders. Learn about today's problems and solutions for the future. Let's all do our part to make this beautiful planet a better place each and every day. Good morning. Today I'm talking to Evan Caron, a 20-year energy and commodities veteran and co-founder CIO at Montauk Climate, an incubator building companies at the intersection of cleantech and infrastructure. Evan was previously head of venture investment at Riverstone Private Equity, a $40+ billion energy investment and infrastructure firm. Thank you for joining us this morning, Evan. For our listeners, can you talk about your background leading up to co-founding Montauk Climate, and then go into some details and share what Montauk's vision and approach is?
Yes. Great. Yeah. So my background, I've spent the last 20 plus years in and around the energy and commodity landscape. The first part of my career was on the energy trading side. So I spent about 2 decades in trading, risk management, fundamental research, specifically focusing on the North American electricity derivatives market, which has a lot of interdependencies with other types of markets, including fuels markets like natural gas and oil, as well as other fuels like coal, and then obviously the renewables market. For the last couple of years before starting Montauk, I was working with Riverstone, the large New York-based private equity business that at one point owned significant amounts of thermal, renewable, and nuclear capacity in North America. And my job there, or my opportunity that I had there, was to learn a lot about the interdependencies of all of those systems, but really mainly focusing on early stage venture investing. After the trading side, moved into venture investing. And that was kind of gave me and my team a lot of insight and experience in building Montauk Climate, which is a first of its kind venture studio and venture fund investing at kind of the intersection and convergence between energy, power, digital infrastructure, finance, capital markets. And we have the unique opportunity to both build businesses where we see opportunity and white space, and invest in exceptional founders at a little later stage that have proven their ability to scale, and we can provide growth capital and equity and additional capital to get them to hit those next levels of inflection points and become successful businesses.
And in your description, you say that your company is an intersection of cleantech and infrastructure. Can you explain what that means to our listeners?
Yeah, I think the first time in modern history, I call it a convergence of different themes are happening at the same time, which is allowing us to say that we're investing at the intersection between multiple themes. If you think about the development of renewables, if you think about the push towards net zero, if you think about energy transition, if you think about energy security, this is one of the first times in the last 100 years that is now intersecting with other technologies. So intersecting with new energy technologies like solar and wind and reducing the cost curve there, intersecting with new technologies like battery energy storage and electrification of transportation. And then obviously the big one thematically is really around the intersection between energy and AI. The kind of the cost of goods for the future of AI, agentic economy, AGI, inference is all power. And so you've seen that now in the public equity markets, the private equity markets. You see just a very kind of an interesting systems-based kind of connectivity between both infrastructure and digital infrastructure, physical infrastructure and financial infrastructure, data infrastructure and electrical infrastructure. Those are all converging, and so we're investing at that point.
I really like that you have a background in other energy, not just focusing on sustainability and renewable, because I think a lot of times people forget you have to look at the whole picture. You have to look at the whole energy system. And one hasn't gone away yet, and it's not going to anytime soon. And I really like that you have the full circle of all of it. I think that's fantastic. So looking at your site, you have a couple of interesting companies on there. Can you talk about Haven, the home battery company?
Yeah, so really quickly. So my co-founder, Philip, and I met Philip through the efforts of Haven Energy. So I was working at Riverstone. Philip was identifying entrepreneurial opportunities across energy, AI, healthcare, and we stumbled upon an opportunity to work together just through kind of a social network and connectivity through friends. And Haven was initially dreamt up by the founder, Vinny, who was a former Bulb executive, which was a large retail energy provider in the U.S., to really be able to identify how to remove some of the barriers to adopting home energy infrastructure, specifically around home battery backup. It's very hard to buy a battery, install a battery, connect a battery, and then it's even harder to understand how that battery actually interacts with the power grid and the ability to monetize that battery through demand response or virtual power plants. And so Haven was the first company that Philip and I incubated, quote unquote, together, where I was brought in as a subject matter expert. He was brought in as the investor. And we were able to refine, define, and execute on a business model that ended up becoming a company that's raised multiple rounds of capital, has installed lots of systems, and is on its way to becoming a best-in-class energy installer and energy manager. That experience around Haven gave us a lot of insight on what Montauk is today, which is the ability to take ideas, capital, and people, bring them together, and build successful businesses from there. So Haven is example one, I would say pre-Montauk Climate, example one of how to do this. We did this again with another company called Electron-X, which is really around democratizing access to the electricity markets and bringing electricity markets into 2020. The last major exchange that launched in electricity was in the early 2000s, and we thought there needed to be better financial infrastructure, better market transparency, easier access, direct access to the energy markets for everyone, including retail energy providers, renewable developers, renewable asset owners, smaller virtual power plants. And so Philip and I did this again with the same idea, a core set of conviction, recruiting a great management team, bringing in really high quality investors, and then launching that business as a separate company where Philip and I stay actively involved, maintain kind of meaningful ownership and insight and connectivity. And those two examples are what led us to develop Montauk Climate as a standalone business to go do this multiple times in different categories, all aligning to what we call the new electron economy.
Can you explain that electricity market a little more for our listeners? I looked at it. It looks fascinating, but I don't quite understand it. If you can just go into how that all works and who can access that.
Yeah, so I would say that the markets are one of the best kept secrets in finance. It is very much relegated to large institutional players and wholesale market participants. And there is a very robust and somewhat unknown market that allows power utilities, investment banks, hedge funds, energy merchants, commodity investors, asset owners to be able to transact in futures markets that allow them to speculate and hedge on the forward price of electricity. And so if you're living in New York City, there's a pricing point called New York City, basically Zone J. Investors and traders can speculate on the value of power and the cost of power and the cost to produce power in New York City versus Long Island. There are a number of independent system operators across the U.S. that are the clearinghouses for those markets. And then there are financial derivative players that trade on top of the physical market, just like any other commodity market. There's a very healthy and robust derivatives market. It is very much capital intensive. It is very volatile. It has meaningful information asymmetry. So the folks that have the best information, the best intelligence, the best trading, the best data make the most money. It's a very volatile market because it's subject to instantaneous supply-demand imbalances. It's highly regulated, and all the information is somewhat open and transparent at some point. And it is it's a great market to be in because it has meaningful exposure to GDP, meaningful exposure to inflation. It's hedgeable, and there are lots of market participants that participate. However, that being said, it is not a market that there's no ETFs. There's no direct access to retail, and the smaller players very much have to go through intermediaries to access that market. Those intermediaries are various banking infrastructure, FCMs, which are clearinghouses, exchanges, over-the-counter brokers, and other service providers that extract a lot of value from the fact that it is a walled-off market. A lot of our companies that we're building are around kind of democratization, decentralization, those themes that have kind of permeated across multiple categories and industries, telco, internet, now Web3. It's very much aligned with how we're thinking about evolving electricity markets, evolving data markets, evolving energy markets, and obviously we're going through a pretty big shift and transition, and we think now is the time to be building those businesses.
What are your thoughts on the electrical grid and all of the mandates that have been put out by government to have electric cars? How realistic is any of that, and what do you think is going to happen with all of that down the road?
I think the conversation has shifted somewhat, and depends on where you are in the world. In Europe versus the U.S., obviously the new U.S. administration has a slightly different view than other parts of the world. I do think that there is emerging technology that makes things better, more efficient, more sustainable, cleaner. Seems to make logical sense, but it won't be at the expense of all, right? So I think that if you looked at the trends in investing in sustainability, it was very much a climate imperative, and I still think it is. I think the challenge in a lot of these modern markets is that a lot of countries that went heavily invested in renewables at all costs to replace fossil fuels, just like you said in the beginning of the conversation, as a disruptive technology that was going to make those assets obsolete and stranded. I think the story and narrative has changed meaningfully over the last couple of years because of some of those failed experiments in Germany and other parts of Europe, where they invested heavily in renewables and they're shifting back to traditional fossil fuels. I think the soundbite now is that renewables and these new technologies are adaptive, but they're not replacing legacy infrastructure anytime soon. I think there's a tendency to believe that all new technology, in my mind, it's a evolution versus a revolution. So we're in an energy evolutionary framework versus an energy revolutionary framework. And I think you have to recognize and understand that there are incremental changes that are going to happen that are going to fundamentally shift how we produce and consume power, how we produce and consume hydrocarbons. But it's not like a light switch where one day you're all electric and one day you're all hydrocarbon. And so I think that, right now in the U.S. specifically, renewables will not be replacing fossil fuels anytime soon. Energy dominance is going to be a key priority. Energy security is going to be a key priority. So it's going to be very much around identifying an optimal mix of renewable, sustainable, regenerative, circular, clean, as well as traditional fossil fuels, hydrocarbons, and even unpopularly coal. And then I think that you're going to see just these modern advancements that technology and time are the answer, right? And so the byproduct of all of that, of new technology, will just be reduced emissions. It will be more efficient ways to consume power. There was mandates around emissions, and ozone helped push the refrigerant business and the HVAC business to more efficient units. But look at the difference between technology to cool homes in the 1960s and 1970s versus today. Today, the same thermal output of a air conditioner with the same technology or similar technology is orders of magnitude more efficient. And so I think you look at technology adoption, you look at cost curve reduction, you look at new AI systems, like those are all going to drive efficiency gains at some point. But the things that fuel it, the power that fuels it, is going to still come from a mix of fuel sources. And I don't think we're going to accelerate the adoption of sustainable technology at the expense of legacy technology anytime soon.
With the new Trump administration in, and I love the fact that Robert F. Kennedy Jr. is there, I think it gives great balance, and, one's pushing energy on one front and one's pushing, I think, more solutions to the environment. I think it's a great balance. That's just my own personal opinion. But can you talk about your personal 2025 climate investment predictions? This is a big change. The G7 isn't being led in the same direction. There's going to be a split. And so what do you think is going to look like moving forward? And do you think some of these other countries in the G7 will lean more towards what this new administration is going to direct?
I think they're going to look very, very, I think just the two parts to that question. My personal opinion is pragmatic solutions that are actually economic rather than concessionary capital and philanthropic capital, or, unlimited money coming from the at least specifically the U.S. government to support things that are not economic. I think there's certain challenges associated with that, but we can leave that to another discussion and conversation around how do you advance new technology. A lot of it is supported by government policy. And so like you think about aerospace, you think about telco, that wasn't purely the private sector. I do think public-private partnerships, similar to Project Stargate and others, are the better way to go versus pure concessionary capital or pure philanthropic venture or pure LPOs or loan guarantees or just government subsidies. I do think that you need to have a healthy balance between commercial solutions that are pragmatic and practical, and a healthy balance between public and private partnerships is kind of the best way to go. But I do think that you're going to look globally and say, why, if this is going to cost me from an economic perspective, from a currency perspective, from a GDP perspective, from a competitiveness perspective, especially with some of the protectionist goals for the U.S. administration, I do think that I believe, in my opinion, is that you're not going to see as much maybe irrational exuberance around, adopting clean technology at all costs. I do think that there are still a healthy balance between what's good for the environment and what's good for the economy. And I think similar to some of the arguments that are being made around tariffs and some of the customs tariffs and the import tariffs that the Trump administration is supporting, is really around, you might have some short-term pain, but there will be kind of long-term gain. And I think that the climate story is challenging because it's a multi-generational existential threat that has limited to minimal deviations to your limited to minimal deviations in how you live your life day to day. But over a longer duration, from a time horizon perspective, you will obviously impact the impact for climate change and industrialization and pollution will be felt for longer periods of time. So if you think about microplastics, you think about pollution, you think about cancer rates, that's not a short-term problem. It's more of a longer-term problem. And so people generally have a hard time understanding and conceptualizing and paying for things that are going to happen in the future. That's why people don't prioritize their health when they're younger. They only prioritize their health when they're older, because no one thinks they're going to get old. So I think that in general, my opinion is that we have to strike a healthy balance between what is practical, pragmatic, and won't create economic shocks to be able to support practical and logical solutions to the environment generally, rather than just climate change, rather than just CO2 emissions, things that just make sense. Reducing pollution and air pollution, I don't think anyone is in disagreement that air pollution is bad. I don't think anyone else is in disagreement that pollution and water pollution is bad. I don't think anyone is in disagreement that dumping plastics and garbage and sewage into the ocean is bad. I think we have to figure out how to build economic models to be able to govern how we manage a common pool resource. And I think the Trump administration specifically has a resistance to putting money into a common pool, like pooling resources, where everyone doesn't pay their fair share. And so I think that's why there's been meaningful reduction in the willingness to fund global solutions where not everybody is required to pitch in. And so again, I think that's a long answer to a short question, but that's my take on things.
Well, wouldn't it make sense to drive innovation versus try and put the onus on the average consumer to resolve this? You look at people being told to recycle. Well, that's great, but then where does the recycling go? People told to drive an electric car, but meanwhile, companies can pollute the water, they can pollute the soil, and all they do is pay a fine and go on with it.
Right.
I would love to see a government come in, and I think this may be the one that fosters innovation, because I think there's a solution to every problem. And then that also fuels the economy instead of hurting the economy.
That's right. I think that this administration is thinking about growth and investment in good ideas and technology to go and then solve it, rather than using taxpayer dollars to fund things that probably create unintended consequences and outcomes. Right. Yeah. And I think people get it's like a dog with a bone. Right. You get an idea and you go run with it, and you don't realize that it didn't work. And that's the reason why cleantech. We're at cleantech 3.0 now. Cleantech 1.0 blew up, lost everybody a bunch of money. Cleantech 2 blew up, lost everybody a bunch of money. It doesn't, again, I think just in general, the way that we think about funding innovation, the way that we think about funding technology, the way that we think about funding has to come from an abundance mindset versus the alternative, which is more of a a scarcity mindset. However, that being said, I do think, generally speaking, we need to view the world as that has scarcity of resources and non-waste. So think about like what DOGE is doing in the government. They're trying to route out legacy systems that have meaningful waste that are just costing just a cost or tax to the system. I think if we shift our focus, and what Elon's doing and what DOGE is doing is saying, hey, the US dollar is not a dumping ground for waste. It's not a dumping ground for inefficiency. They're treating the debt as a scarce resource rather than just continuing to increase debt, because at some point they have to pay the piper. I think climate is going to be viewed very similarly. At some point, they're going to think of resources as scarce resources, and the price of those resources are going to go up versus down in terms of, like, as an example, water is very inexpensive. Clean water should be more expensive. There are certain things that are underpriced and mispriced, generally speaking, because of the way that we view the resource. And I think you need to you got to get your financial house in order first so that you can then go and spend on other things. And so I think we had irrational spending for many, many years in the U.S., specifically around things that just probably didn't work, didn't reduce consumer costs, didn't prove themselves out. And I think that we're in a moment now where instead of focusing, again, we're very much, as Montauk Climate, believe in the intersection points, and that's where we're investing. But we're not in a place where we believe that like irrational investment decisions should be made to just support climate outcomes without making sure that it actually solves the problem that we're trying to solve, which is improving quality of life for the human race, improving biological systems, improving economic prosperity. They all have to be considered at the same time. You can't just cherry pick one, because this is what they call nested polycentric system. They all have interconnection points. They all have governance points. They all have to be viewed as a systems problem rather than a single one-off. And I think that's probably been a bit of the challenge in previous administrations and previous policy directives, is that they favor one versus the other. And that creates problems because you leave out and you try to simplify a very complex system, and it never works. Nature doesn't work that way. Economics don't work that way. Politics don't work that way. And so I think climate will be the same.
Other than your companies, Haven and Electronics, is there anything else in your portfolio right now that's coming into the pipeline, or what else are you doing?
Yeah, we've incubated at Montauk Climate. We've incubated 7 companies. They're still very much in stealth. We've incubated 7 companies that are all operating at that intersection point, whether it's digital infrastructure and advancing and making data centers more efficient, whether it's understanding and democratizing access to data for utilities and municipalities, whether it's creating better risk management frameworks around insurance and climate risk management. It's companies that are focusing on data attribution and identifying first-party data in the age and onset of AI. We're looking at companies helping grid support and supporting the power quality across power markets globally, which is going to become a big problem as things decarbonize and as we retire old infrastructure. So yeah, we run the gambit between upstream infrastructure all the way to downstream services and software. And yeah, we're just very excited about being able to just kind of flex between one company and another, and that's why we built the studio, right? We have the ability to go very, very deep on an idea and subject matter, and we think our best use of time and money and resources is to not focus on one specific company, and that's why we incubate a company, we hire a full-time management team, we bring in outside capital, and those companies all are able to be force multipliers. They take advantage of network effects, they take advantage of learned intelligence, and hopefully they become the next set of unicorn and decacorn companies that are paving the way for innovation when it comes to energy transition, sustainability, climate, electrification, and that convergence point between the things I mentioned earlier in the call.
In closing, since a lot of our listeners are retail investors, can retail investors take your strategy and model that and look at a similar approach to investing in looking at not betting on just one company, but multiple companies at the intersection of this? Is that a workable plan for retail investors?
I think so, yeah. I mean, again, there are plenty of ETFs that allow you to play in the public markets, that allow you to play these themes around energy transition, electrification, data center infrastructure, digital infrastructure, cybersecurity around critical infrastructure. There's a meaningful amount of private credit opportunities that exist that allow retail investors to get similar exposure to private equity style investors that have kind of a real edge. I would say, like any individual retail investor, it would be challenging to get the same type of exposure. Like I wouldn't necessarily recommend everyone go out and invest in seed funds because there's a high risk for loss, and really depends on what your risk profile looks like, your age, and how much capital you have, et cetera. But I do think there are a number of public market companies and public market ETFs and themes that allow you to play what we're playing, right? It's not necessarily renewable stocks, but companies that have, fuel mix portfolios that allow for transportation, that do transmission, that do energy services. Obviously, there's been a big uplift in companies in the utility sector space. Those utility stocks are trading at multiples of historical revenues because they're being viewed as critical infrastructure. American Dynamism and U.S.-based companies, despite lagging European companies year to date in terms of the equity markets, have a very strong position in this kind of new energy economy, new electron economy. So there's a number of companies focusing on that in the data center space. There is going to be winners and losers there. There's obviously the big seven, which all have they do all of this stuff, right? They do digital infrastructure. They're now getting into the data center space. They're getting into the real estate business. I do think that you have trickle up and trickle down effects across the market. If you think about data centers and digital infrastructure, AI and compute, there's a very obvious correlation between them and utility stocks. There's also a very obvious opportunity in real estate because these things take up a lot of land. And so you think about all of the kind of picks and shovels approach to decarbonization, the picks and shovels approach to energy infrastructure, the picks and shovels approach to AI infrastructure. There's plenty of public market plays to go after these themes. And I think there might be some, hype that's already built into the space, but I think we're still very much in the early innings. And you don't fight. There's two things you don't fight. You don't fight the Fed, and you don't fight when people are coming out saying they're going to deploy hundreds of billions of dollars in this category, and you can't fade it, right? I mean, that's what you follow the money. And so that's where, retail investors, again, I'm not an investment advisor and I don't want to specifically pick out individual stocks to recommend, but I do think that you can very much play this theme for quite some time before there's any meaningful change in to create some level of deflationary outcomes that might exist post this super cycle.
Thank you very much for that insight.
Thank you for listening to today's podcast. InvestorIdeas.com is a go-to platform for big investing ideas. From breaking stock news to top-rated investing podcasts, we cover it all. Our original branded content includes podcasts such as Exploring Mining, Cleantech, Crypto Corner, Cannabis News, and the AI Eye. To learn more about our site, go to InvestorIdeas.com. Our site does not make recommendations for purchases or sale of stocks, services, or products. Nothing on our site should be construed as an offer or solicitation to buy or sell products or securities. All investing involves risk and possible losses. Paid content is always disclosed. Global investors must adhere to regulations of each country. Please read the InvestorIdeas.com privacy policy on our website. Thanks and have a great day.